Welcome back. Americans owe more money on credit cards than ever before, partly because of the economy and really just the need to cover basic costs. We've been reporting on that. The holidays certainly don't make it easier to spend without adding debt as well. But we want to help you get ahead of any debt and also to pay it down. Andrea Caceres Santa Maria, the Senior Economic Education Specialist for the St. Louis Fed, is here to help us. Thank you so much.
No, so thank you for having me today.
We appreciate it because, you know, Americans are really using their credit cards a lot more just for some of the basics.
Yes, they are. They are.
Can we, first of all, talk about credit scores? Like, what is a credit score?
So a credit score is a number that is assigned to individuals based on their repayment history. It comes from their credit report. So it's a number that ranges from 300 to 850, and it tells lenders how good you are at repaying the loans that you have that are reported on that credit report. And the higher your score, the more money savings because you save on interest.
Yeah, and how often does it change? I feel like I get a report all the time that says your credit card has changed, your credit score has changed, I mean.
Right, so a lot of credit card companies and even banks now offer you a way to track that credit score, so you get an alert. And so it does seem like it changes often, but pretty much when there's any change to how much credit you're using, your payment history, or if you get any new loans, and also good credit behavior raises that credit score. So the more you're paying on time, which is important, the higher that score will be.
And then what payments actually get factored into your credit score? Do we look at medical? Do we look at loans, for example? What are things that go into that?
Right. So in a credit score, what's calculated in is lines of credit. So a mortgage, a student loan, credit cards. What's not counted, but some credit reporting agencies are allowing you to opt in to be included, are utility bills, rent bills, and those type of things. So again, it's really lines of credit and things that they pull your credit for in order to get approved. And so that gets reported into your credit report.
And just sidetrack here, when we talk about the utilities and all those things, like to opt in, is that to help people who might not have a lot of credit history?
Yes, some of the credit reporting agencies label it as a boost.
Okay.
So maybe if you don't have the best credit score, but you're doing these things and paying on time and committing, which is what weighs heaviest on your credit score, is paying on time, then that could give you that little extra boost if your score is not quite where you want it to be at that time.
Okay, and I'd love to talk about debt usage because I remember, especially being younger, I would pay my payments on time, but that debt usage was not favorable for me. So can we talk about debt usage and how it impacts your score?
Yes, and I can relate to that when I was younger too, because it's like, wait, I have $2,000 to spend? What will I do with this? And so some people, when you get credit afforded to you, especially through a credit card, say about $2,000, then what that's saying, that utilization rate is how much of that $2,000 that is available to you are you using up?
1,999 is what I did.
Yeah, okay. So that
Right,
is a very high credit usage. And
Right.
and referring back to your other question about your credit score changing, if you use that, max it like you did, like 99.9% of it, then that's going to lower your credit score, because what creditors are seeing, or lenders rather, what they're seeing is how much of the credit that's made available to you are you using up. And a rule of thumb is to not use up more than 30% of that available credit. And if you're carrying a balance, try to keep it at that 30% or below. And again, referring to those credit scores, the amount owed also makes up a part of that credit score calculation, and that's actually the second largest part that makes up that credit score calculation. That's why not maxing out your credit cards is not recommended.
Yeah, yeah, and that's why some people don't want to close their credit card accounts, right, too, if they have it paid off for a while?
Right, so when you go to a lender, they also want to see how much credit is available to you. If you close a credit card account, then that decreases that utilization rate, kind of increases a little bit, because what you have available is now a little less.
Right.
Or so.
Right. It's so confusing sometimes, but I do try to think of that 30%. Like, let's say that and pay it off every month. That's what we try to do now.
Try to do your very, very best. And the main thing, again, amounts owed and payment history are the two things that weigh heaviest on your credit score. So try to do those as best as you can. And even if you have to make the minimum payment that month, make it on time. Pay things on time.
Last question, what is the best strategy you think for paying down debt? Is it like a snowball, or is it like maybe just getting those little ones done so you feel accomplished? What do you think?
Right, so it's so timely with the holiday season, because they call the avalanche approach and the snowball approach. So the first is the avalanche approach, which is taking on the credit card debt that has the highest interest rate. So pay the minimum and above the minimum, pay that down. And then you take that amount that you were putting towards that credit card and add it to what you're paying towards the credit card that has like the second highest interest rate. So if you have a card with 24.9% and one with 15.8%, put a lot of effort towards paying off that 24.9, pass on that payment to that 15.8 once the other is paid off. The other is a snowball method, which kind of helps with the little quick wins, because financial health is kind of like our physical health. We've got to get into the discipline of doing it right. And so when it comes to the snowball method, is you can pay off the one with the credit card with the smallest balance, and once you see like, wow, I accomplished that, then you know what, I can do this, and you move on to paying down other credit card debt. So it's kind of feeling that small win.
Yeah, I like the small wins for people who are, really struggling to get that paid off.
Yes.
Okay, so please just be careful during the holidays. Don't go into too much debt. Where can people get more information? What's the website?
We have a website, federalreserveeducation.org. You can also type in FRE.org, and we have a number of resources. We have videos, we have articles on this topic of credit cards. We also have other financial literacy topics that are on there, and they're both for everybody and also for educators. So we're out to educate the public, because smart consumers make a resilient economy.
Oh, yes, absolutely. Well, come back, okay?
Will do. Well, I'll come back. This is awesome. You're awesome.
Thank you, Andrea. You're awesome. Thank you so much. All right, I took a lot of